Right. Hi. Hi. Let's see. Just pray on. Welcome. Welcome. Right. Lord Doc. Welcome. Welcome. McD. Welcome. So I'm streaming on different platforms. We have Facebook, on Instagram, on YouTube. So we're going to be starting in a minute. So let's see here. Let's see here. Right. Kian. Welcome. Welcome. Right. So we're going to be starting in 2 minutes. Let's just, there are some special guests I'm waiting. Let's see here. Let's see here. All right. So let's see. Okay, Kian is, yeah. Hi, Kian. How are you? Right. How was your day? Right. Let's see here. Okay. Yes. So how's your day been so far? You guys tell me. Tell me. Um, just just pray. I don't know if I've met you before. Um, just pray on welcome. Right. So we have MZ God's Diva. You're welcome. Right. Yes, we'll be starting in. I want us to start in exactly 1 minute. Right. Today is going to be very interesting. It's going to be very interesting. Um, it's quite a big challenge to talk about this today. So today we're going to talk about from 1040, right? But trust me, it's quite a big challenge to talk about 10, from 1040. But I'm going to do it, right? I'm going to do it for you guys. So let's see here. Let's see. I can see one person on who is joining from Facebook. Welcome, welcome, welcome. So we're starting in 20 seconds. We're going to start. Um, right? Latecomers will always be late, so we're going to start. Um, so let's see, let's see. Invite your friends, guys. Invite your friends. Um, Look, this is powerful knowledge. So these are things that we all should be aware of, right? These are things that the system does not care about anybody. So you have to help yourself. You have to help yourself, right? So let's see here. So we're going to start now. So perfect. So we're going to start, right? So again, once more, let me go up, right? So just praying, welcome, Lord, welcome, Meg, Ian, welcome, right? Miss God's Diva, welcome. So today we are going to talk about from 1040. From what is 10 from 1040. Now before I talk about from 1040, right? Let's see. Yes, so let me just wait to those who are joining. That's awesome, right? Let's see here. Let's see. So today we're going to talk about from 1040. Now, before we talk about from 1040, let me see here. Unfortunately, I'm not able to share my screen, right? So I'll be sharing for those who are joining live on on uh, on Facebook. So I'm just gonna just bear with me while I share this content for you, right? So let's have a look here real quick. Let's see here. Let's see. Let me share it actually. Right, right. So let's see here from 2040. Right. So where's let me put it up real quick. 2022 from 1040. That's a little share. So let's see. Here. So let me kind of that's important. I'm just gonna close. Let me open that. So let's go to share a form. I share screen. Let's see. I want to share this form so that those who are joining in from online, let's see. Let's go to right. So, right, perfect. So today we're going to talk about Form 1040. Maker welcome, right? Maker welcome. Let's see who else is joining. Perfect. So Form 1040, what is Form 1040? So Form 1040 is, let's pull it up real quick. I'm going to reduce this volume here in the background. Right, so let's see here. And then we can reduce this. It's uploading. Right, so from 1040, right? Yeah, good evening, Mika. Right, so let's go now back. Perfect. Right, upload. Perfect. So now we are going to start finally. So let's see from 1040. There you go. Present. All right, let's have a look here. So what is from 1040? What's happening here? Let's see here. There you go. Okay, there you go. So from 1040 is basically a is your individual, it's a US individual income tax return, right? So before we start talking about Form 1040, I think the most important thing to understand is who needs to file a Form 1040. Form 1040, like I mentioned before, is a US individual income tax return form. So we're going to look at the most recent one, which is the 2022 income tax return, right? So the first thing is who actually needs to complete one in the first place. So that those are the things that we're going to talk about. Now, let me kind of share with you guys the vision. So the goal of today's session is for everyone to have that basic understanding of the things that they should be looking out for once their tax return is filed. So I'm going to repeat it. The goal is that you should have that basic understanding of what's in your tax return, right? You need to know these things because once you sign your tax return, you are basically telling the IRS that, yes, I know what is there, right? I know what is there. So it doesn't matter if, I've seen a lot of things which I'm going to share, we're going to talk about. But yes, let's see. So today we'll just talk about what is from 1040 and who needs to file, right? So the first thing we're going to consider is that who needs to file a Form 30 anyways? Who needs to file one? Why do you have to file one? Who needs to file one? So there are various criteria that we need to look out for. Now, and then so basically, if you are most people need to file a tax return, right? If you are under 65, right, and you're single and you made more than your income was at least $12,950, then you must file a tax return, right? Now, if you are 65 or older and your income was at least $14,700, then you must file a tax return. Now, if you're married, if you're married and filing jointly, then it's slightly different, right? Now, if both spouses are under 65 and their income is less than $25,900, then they don't need to file. You don't need to file. However, if you had taxes withheld from your W-2, then you need to file just to get a refund for the taxes withheld, right? Now it says that what if you are 65 or older, right? If one spouse is 65 or older, then the combined income for the married filing jointly status is $27,300, right? But if both spouses are 65 or older, it says that what the combined income has to be $28,700. So thank you. We have Sutani. Welcome. Thank you there. So that's for those who are married. Now, if you are married and filing separately, any age, and your income was at least $5, then you must file a tax return. You must file a tax return, right? Now, if you're filing as head of household, and if you are below 65, as long as your income is more than $19,400, then you have to file a tax return, right? But if you are head of household and you're 65 or over and your income is above 21,150, then you must file a tax return, right? Now, if you're a qualifying surviving spouse, so if you lost your spouse, if you're below 65, right? If you're below 65, then your income has to be at least $25,900. Now, if you're above 65 as a qualifying surviving spouse, your income has to be above $27,300. Now, we have other cases that you must file. So this is basically, we're going to look at dependents and children, right? Now, if there are certain special circumstances that if you're a dependent or maybe a child, you may have to file a tax return. So basically, if you are below 65, right, and if you made unearned income of more than $1,150, you must file a tax return, right? If you are a child, or if you're a dependent, a child or whoever, and you had unearned income of over $1,150, then you have to file a tax return. Now, if you are a child or a dependent, right, a parent or something like that, and your earned income was more than 12,950, then you have to file a tax return. You have to file a tax return, right? Now, if so, those are some of the cases. And then let's go here. So again, these are things for like married dependents. So if you have like a parent living with you, and so Krista, welcome, right? Let's see here. If you have so if you have a parent living with you, but because we're going to talk about who is a dependent, right? Because we need to know these things. We need to know who is a dependent, but we're going to talk about that first of all, right? So, and then there is a third group of people. These guys also need to file a tax return, right? So basically, if you owe any special taxes, including, for example, alternative, minimum taxes. So there are so many things. So, but I'll just make it simple. Now, if you or your spouse, if filing jointly, received health savings account or Archer MSA and all this kind of stuff, distributions from your health savings accounts, then if you did not use it for medical purposes, then it becomes taxable, right? Now, if you had earnings, now it says that what if you had net earnings from self-employment of at least $400. Now it says that what net earnings, right? I'm going to emphasize again. It says if you had net earnings of at least $400, you need to file a tax return. It means that what if you let's say you didn't have a job, right, and you had you saw one or two things, right, and you have your income minus your expenses. If your net profit, right, if your net profit is below $400, you don't need to file a tax return, right? So those are these are the basic things that we all need to know. Now let's go to the second part of Form 1040, right? Let me see those who are watching online. Let's see how they are faring, right? There you go. There you go. Right. So let's look at the second part of Form 1040. Now, we need to talk about the filing status. Many people, you are going to be surprised, many people don't understand these things. So there are, you have one, two, three, four, five different filing statuses. Number one, a single person is basically somebody who so I'm going to kind of take you there real quick here. Let's have a look. Single means you're not married, right? There's nothing complicated about that. Right. So, but if you are divorced and all this kind of stuff, yes, then you are also classed as single, right? So let's go there real quick here, and let's look at the married. I just want to make sure that those online are on track, right? So please bear with me here. Right. Let's go to filing status so that those online are on track with us. So let's see here. Right. Right. So let's see here. Filing status. Perfect. There you go. Right. So it says that what you need to check single if you were never married, right? If you were legally separated according to your state law, right? Under a decree of divorce or separate maintenance. So there are specific rules that talk about those things. Or maybe you were widowed before January 1st, 2022, right? So there are quite a number of specific things around those areas. So single is basically you're not married. Now the next filing status, let me look at the Form 1040, right? The next filing status is married filing jointly. So married filing jointly, again, you're married, right? Now it says that well, you can check married filing jointly, right? If you were married at the end of 2022. So as of December 31st of December, if you were married, then you have to choose the married filing jointly status, right? Now, again, it says that what you can file married filing jointly if your spouse died in 2022 and you didn't remarry in 2022. So if your spouse died in 2022 and you didn't remarry in 2022, then you can file as married filing jointly, right? You can also file if you were married at the end of 2022 and your spouse died in 2023 before filing a 2022 tax return. So that's kind of the married filing jointly filing status. Now, the next one on the list, guys, from 1040, this is a challenge because it can be very complex. This is like a summary. So the goal here is that the takeaway is that everybody here should have that basic understanding that once their taxes are filed by whosoever, to me it makes no difference, you need to be aware of these things, right? Now the next one is married filing separately. Now, married filing separately, basically these are people who are married, but everybody is doing their own stuff, right? Now there are some circumstances that, yeah, hi Cindy, welcome, right? Cindy, long time. Now you also have the married filing separately status. Now the truth is that when you are married, it's always best to file as married filing jointly. However, there are certain circumstances that people choose or reasons why people choose to choose married filing as separately. And I'm going to give you some examples, practical examples. Now, I've seen cases where people are married. The goal is that I'm going to try to shorten this session just to 30 minutes or 40 or maximum 45 so that we give time to people to have to ask a lot of questions that they have. But like I said, it's quite complex. This form, to be honest, is not something that I can do in one session, right? It's not possible because it's a very long form. But we're going to talk about the things that are really, really, really important, right? The things that you need to know. That's the goal of it. Because so that, look, we should not be ignorant, right? Relax, Harlem, welcome, right? Right, take care. So that's the thing, really. Now, the married filing, we're looking at the married filing separately. Now, I'm going to give you some practical examples. Generally, I've seen situations where you have married couples, but everybody is doing their own thing, right? and they don't want to mingle their finances. So everybody is minding their own business. Then I always ask myself, so why are you married? Right? If you are married and then you are living like an island, then you don't bother marrying. Just stay. That's what I always tell people. It's never best to fight separately. However, I've seen situations where maybe one spouse had a huge amount of debt, right? Or maybe they owed their IRS or something like that, and they were just fed up, right? Again, I've seen situations. Let me tell you this funny story. so I, so the, I've seen situations where maybe one spouse is kind of laid back, they like to drag their feet, and then the other spouse is more proactive, and they keep reminding the other spouse of, oh, we need to file our taxes, and the other spouse takes no action. They get fed up and say, no, no, I've had enough, and they just file their tax return. I've seen those kind of those situations, right? So but generally, when you are married, it's always advisable to file jointly. And there are so many reasons, not only from a tax perspective. Now, what I advise people in relationships, right? Now, when it comes to relationships, it's always best to do things together. It's always best to do things together. And I say it all the time. If you don't want to mingle, the way I see it is that, look, if you are married, right, and you're filing your tax return, you don't want to mingle things. So what's the essence of being married if you cannot combine your finances and work as a team, right? For me, that's kind of a red flag, except if one person is really reckless. But then if somebody is reckless, why do you want to marry a reckless person anyways? Right? So those are things you have to consider, right? But I'm going to go to the next marriage filing status because we have a lot to talk about, right? Now, the next thing to look, the next filing status, let's see here, is a head of household. So head of household is, in simple terms, someone who has dependents. If you have a dependent, then you can file head of household. You can file head of house, right? Welcome, cardiac domain, right? Right. So yes, if you have a dependent, you can file head of household. Now we are going to go into a little bit more detail shortly, right? And who is a dependent and things like that. Now we also have the next filing status, which is a qualifying surviving spouse. So if you lost your spouse maybe 1-2 years ago, then so when your spouse dies, right? So if your spouse died in 2022 during that year and you were not married, then you would file as married. But for the 2 years after that, you would file as qualifying surviving spouse. And there are quite a number of advantages for that filing status. So basically, the advantage is that you get your spouse's their standard deduction, right? That's what you're going to get there. Let me pull this up real quick here, right? Let's pull this up. I just want to make sure that those online can see here, right? So let's see here. Right. Excellent. So, right. So now let's see here. So, qualifying surviving spouse. So, like I said, if you lost your spouse, then you would file that you choose that filing status. Now, I want us to talk about. So, on that form, the most important thing really is the filing status. To make it simple, you're either single, or you're either married filing together, or married filing separately, or you're filing as a head of household. Now, many people like to file as head of household, and I'm going to explain to you why, right? And there are many things. Now, let me just explain. I've seen a crazy story. Let me just share this story with you. So I came across a situation where, again, this is illegal. It's actually illegal, but I've seen it. People do this, but it is illegal. And I have to emphasize, it is your responsibility to ensure that you do the right thing, right? Nakita, welcome, right? So it's illegal. So this is what some people do. I'm going to expose certain things right here. Now, I've seen married couples who actually file. This is what they do. They have children. They allow one spouse to file as head of household, and then they go to another tax preparer, and the other spouse is going to file as single. Now that is illegal, and I have to emphasize that it is illegal. You have to protect yourself. And I said, so let me repeat. I've seen cases where you see one person, you see married couples, they are married, One couple goes to a tax preparer and they say, okay, I'm head of household, I have children, I'm not living with anybody. And then the other spouse goes to another tax preparer and they just file as single. Now, what have they done there? Because look, when you're married, they're just taking advantage of the system, right? Because they are just trying to get a higher a standard deduction, right? Personal allowance. Let me see here. This thing is frozen. I don't know what's happening here. What's happening to this stuff? I hope it's not frozen here. Oh dear. Let's see. Oh, those that are online. Okay, we are still live, right? We have one person online, right? But it's crazy here. I think I'll have to use okay, that's perfect, right? So yes, so they just want to take advantage of a higher standard deduction. Now, let me explain to you. A standard deduction is like a tax-free allowance that everybody gets. That's in simple terms, right? So when you are head of household, you get 19,400 tax-free, right? So what they do is that they want to get 19,400 plus single filing status, which is 12,950. So that's how much. If you add it, I'm not very good with mental math, right? So let's see. So that's you know over so 20,000. That's 10, 20. That's over $30,000 versus if they were filing as married, they would have had only 25,900. But like I said, it's illegal to do that. Don't do it. Don't do it. You don't want to mess with the IRS, right? So perfect. So that's what we've looked at so far. We've looked at the filing status, and we've looked at we've covered a little bit about the standard deduction and all this kind of stuff. So let's look at the dependents. Now, this is where it becomes a little bit interesting, right? So the question is, who is a dependent? So a dependent can be your child, right? Or maybe your a relative and people like that, people that live with you that you take care of, your parent and all those kind of things. Now, even if you're, for example, if a parent is not living with you and you're providing for, I think it's more than 50% of taking care of them for more than 50% of their them as a dependent, right? So let me go here real quick here. Perfect. Let's have a look here, right? Now, so the person will be your kids, right? Son, daughter, or maybe like your son, your children, or adopted children, or maybe children of your children, and all those kind of things. And then you also have siblings, brother, sister, half sisters, and all those kind of people, right? You have father, parent, father, mother, and all those kind of. So those are dependents that you can claim on your tax return. Now there are advantages to doing that, right? But again, those are specific things that we can talk about in another session, right? So I'm going to go real quick just because of our time. So let's see here. So on Form 1040, like I was saying, we've looked at, we've looked at the filing status. We've looked at who is classed as a dependent. Now the reason why many people want to file as head of household status. Head of household means that what? You are single and you have a dependent. Now, the advantage of the head of household filing status is that you get a bigger or yes, you get a bigger standard deduction basically. So instead of the 12,950 as a single person, is 19,400, and that gives you tremendous tax advantages right there, right? So I'm going to go. We've gone through the dependents, right? Again, there are so many things with children. You can get child tax credit and all those kind of, those kind of stuff. But with dependents like your parent, you get credits for other dependents, right? I think it's about $500 or something like that. Now, when you look at your income tax return, box one says that what the total amount from your Form W-2 box one. So that is your gross earnings from your job. Now, from our last meeting, this is what I said. The W-2 position, or the W tax code, as I call it, is the worst position to find yourself in. Look, everybody needs to have a business. You have to have a business. You have to do something. You need to do something, get going. You have to, because otherwise you're not doing any favors to yourself. You have to have a form of business. Do something. You can even start with Airbnb. You can even, just you can follow your passion. Like I said last time, there are 5 ways by which you can start a business. You can start a business based on your skill set, right? You can start a business based on your passion. You can start a business based on a dream. You can start a business based on sporting opportunities, right? It could be because of political reasons, environmental reasons, economic reasons, changes in the laws, and all those kind of things. Like COVID came, right? And then the last way to start a business, you can start a business based. You have to be an inventor. Basically, you need to solve a problem. Now, very few people achieve that, right? But again, that's another discussion we can have for another day. Ways by which you can start a business. We can go in depth, right? Now, if you look at so let's look at box one of your W-2. It says I want earn income from your from your earned income, right? Now I'm going to that. There are many adjustments that they will make from your earnings. So if you had like qualified dividends, you had IRA distributions, you had pensions and annuities, you had social security benefits, you had taxable interest and all this kind of stuff. So those are things that may increase your taxable income, right? And then you have capital gains or capital losses. Now, wealthy people take advantage of capital losses a lot. Wealthy people take advantage of that. That's one of the loopholes that they use to reduce to reduce their taxes, right? Now, if there's a box I want to emphasize on, right? It says that one. Let's see here. Now, when you are a business owner, right? The advantage of having a business is that you can have losses, and you can use your losses to offset or to reduce your earned income, which is kind of taxable. So you make an adjustment to your earned income, and it's going to reduce your taxable income. Now, there are businesses that you can start and make a loss of 10. Look, statistically, most businesses do not make a loss for the first 2 to 3 years. So the IRS understands that if you have a business and you make a loss for 1 year, 2 year, 3 years, you will not be audited because it is expected. Most businesses, as a matter of fact, only 25% of businesses make it up to 15 years. So most businesses fail, right? So you just start something, right? Now, so we're going to go straight. If you look at if you look at line 1, number 8, it says our other income from schedule 1, line 10. So these are adjustments from other sources of income that you may have, maybe from schedule K1, from your LLCs or your S corporations or your corporations, or you can have business income and all this kind of stuff. So they will make those adjustments, and that will reduce your taxable income, right? So, and then you have what we call so after that, once you've had your adjustment, we have now your total income. Now, after the total income, you have what we call you're going to have we have your adjusted gross income after all those adjustments, and then we have what we call on line 12 the standard deduction. Now, you can either use your standard deduction or you can use your itemized deduction. Now, I need to emphasize on this. I think, no, okay, I'm going to do this as a separate session, right? The difference between a standard deduction or an itemized deduction. So who wants me to talk about it? Who wants me to talk about it? Anybody is interested, right? Who wants me to talk about the difference between a standard deduction or an itemized deduction? Who wants me to talk about it? Nobody's saying anything, right? So you guys, I believe then that you guys, all of you here, understand the difference between the two, right? So Krista says yes. Anybody else? Anybody else? Right? So I have 2 people saying they want to know the difference between a standard deduction and look, it's so critical to understand this. It's absolutely critical. I'm giving you the secrets right here. These are the key things I'm talking about. I'm showing you the key areas that you need to focus on when you're doing your tax return, right? So we're going to organize one session and talk about the difference between a standard deduction or an itemized deduction, right? And how you can use it to your advantage. And this is, let me just share something with you guys. I came across somebody's tax return, and the tax preparer it was crazy. They claim so many, they inflated all the deductions, charitable contributions, interest rate on the mortgage, and all this kind of stuff. And it was crazy. It was absolutely crazy. Do not do that. That's why I like to have this session, because you need to understand these things, right? So we're going to talk about it Do you guys want us to talk about it next week, next Sunday? All right. So we're going to talk about the standard deduction versus the itemized deduction next Sunday. Now, this is going to help you guys. It's going to help you guys. You need to understand this, right? So now, again, after that, you have other adjustments to your tax return, like the qualified business deduction and things like that. But I'm not going to emphasize on those because it's a bit kind of complex. And the goal is just to show the key areas that you need to be looking out for in your tax return. Again, hi those watching from other platforms, right? In another session, we're going to talk about what to put on your form W4, right? We're going to talk about all those things. Again, then we'll have separate sessions to talk about form W9s and all these things that people need to understand. So let's see here. Who's enjoying, who's having fun? Tell me who is enjoying. I hope it's not boring, right? Who is having fun? Tell me who is having fun here. Right? Let's see here. Who is having fun or who is not having fun? Right? I know some people don't like taxes, but guess what? Wealthy people love to talk about taxes because they hate paying taxes. Right? Right. Your Sykes is welcome, right? Welcome. So we've been talking about from W2. So I'm going to go to page 2 of your 1040 so that we can kind of round up. I want us to round up in the next couple of minutes, right? So that ask we can ask all the questions. You guys can ask questions and I can answer the questions. So now on part 2 of your 1040, you have what we call the tax credits. You have child tax credits and other education and all this kind of stuff, including self-employment taxes and all this kind of stuff. And then you have the amount of taxes withheld from your W2. Now, I know a lot of nurses always ask Jerry, I want to go exempt. Should I go exempt? Should I not go exempt? Now, I think we need to have a separate session about this, about going exempt or not going exempt, because you see, when it comes to taxes and finances, there's never any one size fits all rule, right? There's never any one size fits all rule. So I think we need to have another session to talk about whether going exempt or not going exempt as a nurse or maybe a physician or whatever. We can talk about it, but it's going to be an exciting session. If you guys want me to talk about anything, just let me know, please, right? Now, so now you see the amount of taxes withheld on your W2 is absolutely critical. Now, okay, let me just finish this, then I'll come back to that, right? So if you look at your W2, once you've had all those adjustments and everything, you either going to have a refund or you're going to owe the IRS money, right? So let me make things simple for you guys. The principle is simple. The easy things you need to understand on your tax return will be things like, number one, because this is where a lot of tax preparers commit fraud. And again, I have to tell you guys, I'm very straightforward for those that know me, right? You have to be careful. It is your responsibility to ensure that you are getting the right person to do your job. Look, it does not need to be me, right? Again, I'm a tax strategist, so I have a passion for taxes. I love talking about these things right here, right? The nurse, nay, welcome, right? So when it comes to taxes, it's your responsibility. Like I said, these are the key areas where tax preparers commit a lot of fraud. Again, number one, the filing status, right? And this is where people commit a lot of fraud, the filing status. Number two, the itemized deductions, right? These are areas where people commit a lot of fraud. Number three, you have the businesses, right? Again, but those are things that we'll need to talk about in separate sessions. The summary is that when you file your tax return, you need to look at those three areas. And what are those three areas? Number one, your filing status. Number two, your itemized deductions, right? But we need to talk about that in a separate session. So we're going to talk about that next week, right? Number three, Ida, welcome, right? Number three, we spoke about businesses. This is where people commit a lot of fraud. Again, I'm going to show you guys all these things that you need to understand, right? Who is it? PGH Destiny, welcome, right? Yes, so these are things you need to understand. So now let me make it simple for you guys. when somebody files your tax return, you need to make sure that you are claiming the right filing status. Number one, I'm only going to focus on those three areas. Number two, you need to check your itemized deductions. Now, let me tell you guys a secret right here. If you are single, right? If you are single, you are less likely going to itemize if you do not own a property. So if you are not a homeowner, you are hardly ever going to itemize. The only so let me break it down for you guys. Remember, when you are single, right? Your standard deduction is $12,950. So for you to really itemize more than that, you should be giving about $10,000 to a church for donations, for tithes and offerings, and for or charitable donations. But not many people do that. So if you're single and you're giving and you've given more than $10,000 as charitable donations, you are more likely going to itemize. But you need to make sure that you get a statement from that church that shows that this is how much you donated, right? Now, again, if you are a homeowner, right, and most people don't realize this. If you are a homeowner, so you are paying a mortgage, right, and you have interest on the mortgage and things like that, you are more likely going to itemize because real estate taxes are high, the property taxes are high, and the interest on the mortgage and all those things. So you're more likely going to itemize if you're single and you have an investment property. And then if you make donations of over 5,000, oh, guess perfect, your itemized deductions will be higher, right? Now, if you are head of household, it's hard for someone with the head of household status to be able to use their itemized deduction. It's hard, except if you gave probably over, let me see, if you're a homeowner, right, and then you give probably over 5 to 10,000 in donations, then you are going to itemize. Now, if you're married, right? If you're married, and I'm going to emphasize this, if you're married, right, you are less likely going to itemize. Trust me. Even if you have a mortgage, except if you have $1 million house, right, where the property taxes are high and all this kind of stuff, right? Except if you have $1 million house. Now, but if you are married and filing together, you are less likely going to itemize. Now, so if you are married, you own a home, and you donated over $10,000 in charitable donations, then you are more likely going to itemize, right? But again, like I said, next session, we are going to have to talk about the standard deduction and the itemized deduction. So I'm going to focus on those areas that, a lot of these tax preparers just mess people's life. Look, the reason why I share these things is because, number one, you need to understand these things. I've seen people who have been messed up by these crazy tax preparers, and then they try to call the tax preparers, and those guys never answer their phone numbers, right? They never answer any call. So you have to be careful. You have to be careful. So I'm going to stop here so that we can take a couple of questions, right? Those who have any questions, then I can answer the questions. So let me see here. So let's see. Let's see who has any question. Who has any question, right? Because I don't really want to make the videos long just because of my schedule as well. So let's see who has any question based on the form 1040, which is basically your individual tax return. Who has any question? Let's see here. Who has any question? Let's see who has any question. Right. So I'm just checking. Any question? Any question? Any question? So any question we have? If no question comes in 1 minute, then let's see. Any question? Any question? Right. Right. So let's see here. Now, one of the things I'm going to request from you guys here today is that now my goal is to be a blessing to you guys, right? My goal is to be a blessing to you guys. Can you guys tell me anything that you want us to talk about? Anything, any tax laws that you want us to cover in one of the sessions? So that, because it also gives me an opportunity to be a blessing to you, it also gives me an opportunity to plan, because I'm doing now what I call is an exclusive it's about let's talk about taxes. Let's look. I love taxes. It's for me, it's a passion. I love taxes. I love to talk about taxes. it gets me excited, right? So that's why I decided to have this weekly podcast, as you may call it. Let's talk about taxes. Any tax question you can bring in here, we'll talk about it. But I have a program. So we are in season one. Next year, I'm going to go to season two, right? So this is episode two. Episode two is from 1040. But as you can see, it's more complex than what I've just said here. What I've just done for you guys is to explain the basics that you guys need to understand, so that when you sign your tax return, you know that yes, at least I have this basic understanding, and I'm proud. I know that yes, I am aware of the contents of the tax return, right? So I don't see any questions, right? Now, is there any topic that you guys want us to talk about, right? Let me check those online. If anybody is saying anything, right? Anybody has anything that they want us to cover, right? Let's see here. Right, let's see here. Let me see here. Let me check online. Let's see. Those online, yes. Right. Anybody wants us to talk about something specific? Right. Oh, the from 1040 was already sharing apparently. Right. So I need to stop the screen share. Right. So there you go. So I completely. So let me just let me stop the let's see here. Right. So there you go. There you go. Those online can see me now. Sorry, I actually forgot. So I was sharing from 1040 with them, right? So somebody's asking, okay, let's see here. Do you have to pay a credit that you get back? Can you kind of, and then this one says, are you licensed in Virginia? Yes, I am. Do you have to pay credit that you get back? Can you kind of break it down for me, please? Just give me a practical example. Look, I like to be very practical, right? I like to be very practical. So if you're asking a question, just be as practical as possible, right? So just say, I pay this. My situation is I pay this credit, and just be practical. That's the language that I understand. So if you don't mind, please be practical. You don't have to put your name there. Just be practical, and I'll be able to help you, right? The goal is that you have that basic understanding of the things that you need to be aware of when you're filing your tax return, right? So let's see here. Now, when you are first time home buyers, now when you're a first time home buyer, right? Let me tell you guys, when you buy your home, the only thing that you can get is number one, if you are a single person or you're married, right? You get it from 1098 from the mortgage lender. Now, if you see box one of the form 1098, it tells you how much interest was paid, the mortgage interest. That is what you can claim as part of your itemized deductions, right? And then if you look at on that form 1098, there is a box that it says order. It shows you the amount of real estate taxes that have been paid. So those are the things that will go on to your itemized deductions, right? So you don't really, those are the things that you can claim on your tax return. Now, again, itemized deductions is something we're going to talk about hopefully in the next session, where we're going to talk about that. So those are the things that you can claim. And then if you pay like on that from 1040, 1098, there's a section that says what's that? What's the name of that box? So if you paid like if you bought like if you points on your mortgage, there you go. So yes, you can also claim that points on your mortgage. So like I said, there are so many forms to talk about, and it's very hard to talk about everything, right? So okay. Yes, and then again, certain states are different, but at the federal level, that is what you get. You put the interest the interest on the mortgage plus the real estate taxes plus any points paid on the mortgage. That's what goes on your itemized deductions at the federal level. Now, states are different. Some states might give you those credits for buying a home, right? Again, it depends on the state, right? So we have to answer that question, we have to go into the specifics of that state, right? Let's see. Okay. You say that there was a time in 2008, right? That's 2000. Are you talking about 2008 or 2018? That's a long time ago. Right. Yes. And now they're asking for money back. Yes. So, to be honest, I'll have to look into that. Right. I'll have to do some research to be able to answer that question. Right. 2008 is a long, long time. Right. So I'll probably have to do more research to be able to give you, an answer to that question. But those are the things we Fabrice, welcome. So those are the things you need to look at. But like I said, we're going to have separate sessions to talk about businesses. We're going to talk about Schedule Cs. We're going to have separate sessions to talk about what business structure to get, whether it's a corporation, whether it's an LLC, whether it's an S corporation, or whether it's a partnership. We're going to talk about all those things. We're going to talk about, again, I'm just sharing the vision with you guys. We're going to talk about including real estate. What kind of business entities to use for real estate. So these are things in the pipeline that we're going to talk about, right? So I'll have to any other question, please? Any other question for me? Right? Any other question? I'm just looking at the stuff. Any other question? Any other question? Like I said, regarding your the stuff, I'll have to go back to look at the specifics of that in 2008 and all those kind of things. But it's a long time. Generally, I don't worry about 2008. How many years ago? That's a long time, right? It's 15 years ago, if I'm not mistaken. So let's see here. So I can see Cheryl, welcome, right? So we're kind of rounding up now. We're kind of rounding up. So has anyone got any question that they want me to answer? Again, it's about the topic of this program. So like I said, we have it every Sunday at 7 o'clock Eastern time. Invite your friends. Invite your friends. These are things that everybody needs to know and understand. Again, you are doing it for your benefit. You're not doing it for me, right? It's a choice that I have made to do these things. You have to do it. You have to help yourself and you have to help me to help you. Like I said, if you have any topic that you want us to talk about, you can bring it. But again, we've come to the end. For those who are on Facebook, I want to thank you guys. Right? For those who are on, let me stop the streaming on the. Let's stop it.